Thanks, Tim. You stole a few of my lines there, but BlueBet's been running for around 6 years. As Tim said, we're an Australian wagering operator. While we've been operating for about 6 years as BlueBet, the majority of the management team have worked together for significantly longer in other successful Australian wagering businesses. As Tim said, until IPO, we were totally self-funded. And really in those early days, it was about us building the foundations of a strong betting company. And we're really looking to turbocharge that growth now that we're using some of those funds from the IPO. So if you just slide forward one slide there, guys. And this is a bit of an overview about us. As we've got our own technology platform, it's very scalable, which has been very important as we've seen the business grow significantly over the past couple of years. Not only can it handle the growth that the business has had, but it also means there's very limited adding to headcount, as it's a lot of autonomous processes during the process. We have very much a dual growth strategy, which is continuing to grow the Australian business. As mentioned, we only have a little over 1% of the market here, and we're profitable at that point. So there's enormous room to continue to grow. And the great part about the business, as I mentioned, is the scalability of it means that a lot of that flows straight through the bottom line. We've had a significant step up in marketing costs post the IPO, which is part of really trying to turbocharge the business. But other than that, really our costs stay pretty fixed. So there's a great opportunity to grow the business and continue to grow the profitability of the Australian business. The other part of the growth strategy is this greenfield opportunity in the US. It's very unusual that the US is such an open opportunity, but essentially sports wagering has either been illegal, or it's been illegal there in most states. So it's been either underground or offshore. So it's a really exciting opportunity. It's really only been the last 2 to 3 years this opportunity existed. And we have a strategy for entering that market. It's a capital light strategy, but we think it allows us a great opportunity to access it without taking an enormous risk. The wagering industry as a whole has been growing. The Australian market has continued to grow. Australians are some of the highest bettors in the world. And the US market has continued to grow off a very low base. But certainly the estimates have been, I think it's been underestimated the size of the market. And I'll show some slides on that a little bit later. Just go forward a couple of slides there to slide 4. This is having a look at our key metrics versus the prior corresponding period for our financial year 21. We had really strong growth. As you look across our bet count, our net win and our turnover there, all up between 80 and 95%. 6.5 million bets, 35 million net win. And that flowed through to a normalised EBITDA of 7.5 million, which was up close to 50% on the PCP. Our net win margin at 10.3% last financial year, really strong in this industry, compares very favourably, and certainly that's flowed through into this financial year. We had a really strong first quarter, which I'll talk about in a second. As I mentioned earlier, we hadn't spent a huge amount of marketing in previous years. It's really only over the last year or two that we've really started to step that up. The cost of our first time deposit there at $214, again, is really strong in this industry. And you compare that against the annual customer value of $1,095, shows we're getting a really strong return on that investment, and gives us great confidence as we continue to grow our marketing spend, that we're going to continue to get a really strong return on it. Just go to the next slide there. Having a look at our product mix, we've seen really strong growth across our product range in Australia. Sport has been slightly affected over the past year or two due to COVID and the cancellation of a huge number of events. But where we have seen some really unusual strong growth is in things like greyhounds, which is probably an industry that most people don't necessarily think of. And a lot of that's down to our mobile first strategy. Everything in this company, we think about mobile first. When I say that, I mean using a mobile device rather than a desktop or any other sort of way of people having a bet. We don't do retail. We're 100% online. 66% of our bets are taken through our mobile apps. That's our native apps, and of the rest of which is all pretty well web traffic. The majority of that's through mobile devices as well. There's been some limitations, particularly with Android. Previously, Google hadn't allowed gambling apps in the Play Store. That changed in March this year, so we've seen significant growth in Android traffic. But really that mobile, people betting on their mobile is the foundation of the business. And that's a big part in seeing growth in areas like greyhound racing and harness racing, which are at night. And it's a very recreational product, which we derive really strong margins from as well. The sport, we continue to see growth. We've run there, in the last financial year, around 14% sport as turnover. We'd expect that to rise significantly over the next few years, normalising somewhere around 20%. And the sport margins, have been really improved in recent times by the introduction of some new products like Same Game Multi, which has been very appealing to the younger audience as well. Moving on, this is just looking at our Q1 metrics at the quarter just ended in September. Again, really strong growth again, across all these metrics. Active customers, turnover. We had a really strong margin quarter-wise at 11.8% net win. That's not something that we'd budgeted for, and it will normalise over the year. We'd expect that to normalise around that 10.3 to 10.5 mark. But certainly a really strong quarter, which has really showed the momentum has continued from last financial year, and that's continued on to what's been a really strong spring carnival for us. This is obviously a tremendously busy time of year for the business, and all our technologies held up really well. We had a new website launch just before the carnival, again held up really well, and we've got new apps coming later in the year as well. So the business is continuing to grow, and as we've come out of lockdowns, we've seen that a lot of those customers who came across, we didn't see necessarily huge growth in wagering in Australia during that period. What we did see is a really accelerated migration to online, and that's certainly continued post the lockdowns. The next slide just shows continuous growth in our active customers across the quarters. Really speaks for itself, so I won't linger on that too long as we look to get to Q&A. From a marketing point of view, if we're looking at the next slide there, we've had previously we had a really strong focus on below the line digital. We've changed that up with our first major TV campaigns from that money that was raised during the IPO. They've been successful for us. As an Australian betting company, which is quite unique in this market, a lot of the bigger operators are overseas, and we've certainly really honed in on that. We've had a strong focus on regional customers and on pay TV with our new above the line campaign, and that's certainly we've been very happy with the results from that. The next slide just looks at some of the below the line activity that we do. It's certainly been the foundation. Again, that mobile first approach really strong. People, in-app advertising, in-app search, those sorts of things really generate the sort of customers we're after, and we get a very solid return and pretty guaranteed return on our investment in those. So that remains a major focus for the business. Looking across to our US market entry, the Australian business is really all about scaling our current business to continue to grow. The US is a totally new opportunity. Previously not legal, now legal in 22 states, operating in 22 states in different levels. Some's mobile, some's retail, but certainly we expect that number to continue to grow. There's been estimates from analysts of anywhere between over 40% of the states in the US, and potentially up to 96% of the population by 2025. A number of the big states haven't come online yet: California, Texas, New York, Florida. So certainly there's a lot of movement there, but it is a wonderful opportunity for a company of ours that it's got a great history in running profitable sports books and also building all our own technology, which is one of the great shortfalls in the US market. It's surprising that, but because they have no exposure to it previously, it is a great opportunity for us to use the years of knowledge that we have here. The next slide just talks to the opportunity around what I was talking about before. If you look at those forecasts, you can see at every point they've essentially been underestimated. There's a couple of different models down the bottom right corner there about what the potential market can get to, modelling on the US and UK market. And the headline probably at the bottom there is Goldman Sachs have said at maturity it could be a $39 billion industry. But the Morgan Stanley data in the top right corner there just shows that they've continued to raise their estimates of what this market could be worth. So certainly it is a tremendously exciting opportunity for a company such as ours. Our strategy with the US, which is the next slide, slightly different. In Australia, we run as a straight B2C wagering provider. In the US, that is not our long-term strategy. There's huge companies going in there spending fortunes on customer acquisition. It's not something that we want to get in competing with them against them. They have deeper pockets than us, and it doesn't make sense for us to do that. We are going into a select number of states as a B2C wagering operator, but really that's to prove the capability of our team and our technology and our product in the US market, with a long-term view of really doing partnerships with existing US entities who have their own brand, who have their own databases. So what we would be doing with what we're calling a sportsbook as a solution is really going and doing all parts of the sportsbook for them. That's from customer onboarding to their client verification to their banking fraud, but most importantly, that trading platform and our trading team coming in and running the operations for them. We've got a number of targets for this, mainly around that small and mid-tier casino operators who have a number of licenses in the US market, but they don't have the history or the knowledge on how to run a profitable sportsbook. So a number of them have gone down different paths with that, trying to run themselves using off-the-shelf platforms. But really what we think we can provide for them in the US is a best of both worlds strategy, where they have part of an asset growth. They own part of the asset, but they also have the advantage of having our knowledge and our technology to have a unique and quality product in the US market. So that's Tim. That's probably my 10 minutes up. So I'll throw back to you for any Q&A.
Excellent, thanks, Bill. Plenty of questions. Can we start with how much did you raise in the IPO, and where are those funds going to be allocated?
Yeah, so of the $80 million we raised in the IPO, 50 million went back into the business. 10 million of that went to a real step up in Australian marketing. And the great thing about that is the business has now grown to a size where it can maintain that growth in marketing year on year. So that's really been a positive of that. The majority of it has gone to these US, setting up US offices, licenses, and some marketing in these initial states. And then there's another portion that's gone to continued product development. Product is really everything in this game. Everyone bets on the same thing. Everyone bets on the football or the races. There's not a great deal of differentiation at that point. So it's really about the user experience that's so important. So, we've certainly put a good chunk of those funds into continued platform development as well.
Yeah, be pleased to know I'm an Australian customer. I love your commercials. So a lot of people online would understand the Australian market. It's obviously very competitive. Can you give us more insight into the US market? What's your kind of timing around launch? And then maybe some more insight into the regulatory environment. It seems like it's a state-by-state proposition.
Yeah, so that's exactly right. It's state-by-state license. In Australia, we have one license out the Northern Territory, allows us to bet anyone around the country. In the US, you need to be licensed in each state. So we will be going live in Iowa as our first state, which will be in March next year. Iowa is a smaller state, and there's a number of reasons why we've picked these states to go into on a B2C basis, which is around, they all have different taxation rates, different licensing costs. So we've certainly picked the ones that we think have a clear path to profitability. There's new opportunities appearing all the time with new states coming online, but you do have to satisfy, as you mentioned, licensing criteria in each state, and also some states require you to do deals with other license holders. What's widely termed a skin agreement. So that's something we've done in Iowa as well.
And what does a partner look like? Like you provide the technology. Who is that partner?
So probably long term, there's a number of options. The most obvious is casino operators, and it's a model that's been used by a number of the bigger people. Entain, who are a huge worldwide operation, has done a deal with MGM and an exclusive deal. Others have done acquisitions. DraftKings have gone and acquired some people with their platform. FanDuel is sort of a bit of a reverse case with Flutter, a huge worldwide company, have acquired FanDuel for the brand. But that mix between someone having a strong brand in the market and also having someone who has the platform and the know-how is really, I think it's the model that's going to really work strongly. Now, we're certainly aiming at the tier down from those really big players. We're not aiming at the MGMs or the Caesars. Caesars acquired William Hill in a similar sort of way. We're aiming at that group who don't necessarily have the capital to go out and do a big acquisition, but they want to have leading market technology and a team who can turn them a profitable sportsbook and know that they can take advantage of this opportunity that they have with the licenses. So it's really that tier down we're aiming at. which suits us well. We think we can provide them with a unique and competitive product that they probably aren't going to have access to, any other way. If they use an off-the-shelf product, A, it's not going to be unique, but B, it's not having that team that we're going to put in place in there managing it every day.
And Bill, finally, one last question, which is a good question. The esports market is opening up and growing dramatically. Any plans to venture there?
Yeah, look, certainly it's an interesting market. There's a number of different spaces that we're looking around. We've offered esports markets in Australia, but to be truthful, not on a huge scale. Bizarrely, we had a meeting about esports in the office this morning with some of the younger guys who are, a number of our team are moving to the US as part of our expansion, and some of the younger guys there. Certainly, it's probably not exactly my wheelhouse if I'm going to be truthful with you, Tim, but I've certainly chartered some younger guys in the office to go and do some reports on that, and we're actually launching a new range of it in the next couple of weeks. But really, there's an opportunity with it to continue to grow it. There's a big question mark about what importance it will have. Certainly, obviously, there's a market for people betting on esports. Do those people then come and bet on other things? Will they then bet on the football? Will they then bet on the races, and etc.? So, that's certainly a big part of it. For us is, will our other products have an appeal to them, or should we create a niche product just for that market? But look, it certainly is a growth. We've seen, a number of different areas like esports. I mean, things like NFTs with companies like Zrun having, huge growth as well. So certainly we're looking at all those opportunities all the time in this business as we look for, different opportunities in the market as well.